Alright, welcome back to MMG. I just want to make a quick update on gold and silver here and the markets. Nothing too serious. There's constantly news coming out and blah blah blah. So, this is the 3-day chart on gold here, and silver looks very similar. Listen, the bottom for silver was 1660. And the bottom for gold was 1447. And we all know I bought that bottom. I bought that dip. I also bought a little bit higher. No big deal. You're never going to catch the top and the bottom exactly. But I catch it more than most people. It's pretty funny because I caught the top on gold and silver when they peaked out, right? I caught that top exactly to the minute. Anyways, by the way, like 90% of the time I'm right. On the big swings, like the major trades that you would trade, let's say on the weekly chart, I'm right. Like, since I've been doing this, I think. Anyways, although I could be wrong. There's going to be a day I'm going to be really wrong in a big way. We saw that with Bitcoin, but come on. I mean, there's manipulation that just would wreck everyone, and I think that's what we saw there. So, although I saved everyone in Bitcoin, if they listen to me, I told you don't buy all the way up to 14,000. I said this is a giant bull trap. So you wouldn't have lost any money if you just listened to me. I literally said it from 6,000 Bitcoin all the way up to 14,000 Bitcoin. Like, this thing's an entire bull trap, and that's what it was, right? Now it hit 6,800 yesterday. It's probably pumping now. Who knows? All right, so this is not financial advice. Consult your financial advisor. This is more of an educational channel. TA, and then listening to me rant, giving you guys my opinion. Talk to your licensed financial advisor before doing anything. Stocks, extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over, and I really mean that. If you invest too much, you'll get emotional and do the wrong thing. And have your stops in place, emotions up. So, gold here on the 3-day looks very good. Looks strong, very strong. It's coming up on support here. Let me blow it up so you guys can see this better. I don't want to hear people whine and complain. Oh, I can't see the top of the chart. Whoa. All right, so we have two bull flags. This bull flag hasn't played out, but looks good. Looks very good. Looks very bullish to me. And gold's definitely found some support, some buying support here. Previously, there was a ton of buyers in this area, so it's major support. If it falls again, I don't care. Who cares? Oh my God, it's going to fall another $20. So what? What's it going to do? Fall to 1440? I hope it does. I'll buy even more. Either way, it's going to break out soon. Another reason why I think it's going to break out, besides the fact that it's oversold on the oscillators and everything else, right? We're coming up on the holiday weekend. Markets are going to be closed Thursday, and no one's going to trade Friday. Who's going to hold over the weekend? I think it's extremely risky to hold over the weekend. Another thing, news just came out that Trump, right, signed that legislature for supporting Hong Kong, which is a huge slap in the face of China. You have to understand Chinese culture, communist, tyrannical culture there. I'm not saying the people are all, the people are people. I'm talking about the people in power, their government, right? The Chinese. They have to appear strong. If Xi does not appear strong, he's going to get a coup. They're going to overthrow him. And when you get overthrown there, you die. So Trump, huge slap in the face. There's not going to be a trade deal. I already made a whole video on why there won't be a trade deal a few weeks ago, right? Or a month ago. All right. So that just came through today. And the market's been going up nonstop because of the trade deal BS, right? Well, look at this. The market's been going up simply vertically. It hasn't had a 0.5% pullback on the S&P 500 within 35 days. Over a month, there hasn't been any, not even a dip. Not even a dip. The VIX has been like flatlined. And I've been saying that for a while now. So it's really overdue. Really, really overdue for a major correction or pullback on all equities. And it's hilarious because, I mean, if this isn't indicative of a top, I'm not saying this is the all-time top, but I wouldn't be surprised if it is. And I'm going to show you guys S&P. One of my indicators is telling me it's the freaking top. Like, the top. I'll show you guys that in a second. But let's listen to this because it's hilarious. And Trump is hilarious. I don't care what you think about him.
You know, we just said another stock rocket. You saw that, right? The stock market. You know, we just said another stock rocket. You saw that, right? The stock market. You know, we just said another stock rocket. You saw that, right? The stock market.
It's hilarious. We just said a stock rocket. It's the stock market. Anyways, yeah, so about the stock rocket, let's take a look at the stock rocket. It looks like a rocket. It's starting. This looks, of course, this isn't on a logarithmic chart, but the logarithmic skews it. It's a rocket. It really is. But look, the TDI indicator has called the peak in 2008. It called in 2014 going into 2015 that huge correction in the market. That was a decent drop. It was another 20% drop. It called that, and it didn't quite call the 2001 correction, but it was close enough. It was on the 7 count. But again, you know what happened, in 2001. So, in the NASDAQ bubble. But if you put this TDI on the NASDAQ, looking at the 6 monthly here. All right, here's the NASDAQ composite. This is a 6-month time frame. Every candlestick is 6 months. So this is for your extremely long-term investors, right? It called the top on the NASDAQ. Called the top in 2008 as well. And it's calling a top right now. Let's go to the Dow. It's DGI. Here's the Dow. Boom. Beautiful. Called the top for 2008. Actually, the Dow fell first in 2000. The beginning of 8 and the end of 2007. It's calling a top now. So this is it, guys. It's the big one. We're really close. I'm dead serious. So let's go back to the S&P. Try to narrow this down. I don't know if this will be the beginning, but of the big one, but let's. I'm looking at 6 monthly candlesticks. All right, so really long time horizon. Basically, what this is telling me is within the next 6 months from now, the stock market is gonna the peak is in. Anytime from now to 6 months, the peak is in. Okay, that's all I'm saying with that chart. Here's the monthly chart. It's on the 3 count. Again, I mean this is very hyperbolic, very long running. Let's go to a weekly. The weekly is on a 6 count out of 9. So possibly 7, 8, 9. Possibly 3 more weeks of upside. Maybe. Let's go to the 3-day. The 3-day I thought it was going to correct a few days ago. I've been saying it for the past few videos. For the past 2 weeks, the stock market's going to correct, and it hasn't. All right. Well, let's. So I was wrong technically, but and I'm technically wrong, but well, it did dip. It just shot right straight back up. It's on a 3 count on the daily right now. Let's take a look at the 12 hourly. This is ridiculous, honestly. Stock rocket. It's a rocket for sure. Here we go. The 4 hourly is finally on an 8 count, about to come up on a 9 count. And if the S&P could just fall below 3,100, I think that could trigger a huge sell-off. Huge sell-off. So why am I even talking about this? Because I want gold and silver to stock rocket, to rocket, right? And listen, we haven't had a dip, not even a dip, not a 0.5% dip in the grand scheme of things in the past 35 days. So there needs to be a major correction. I'm still sticking to my call that I've been calling for the past 2 weeks. I'm just, they keep pushing the damn market higher because it's the holiday season and they want everyone to be confident and to keep shopping. Spend your money well. Keeps tweeting that out. So, which is crazy because he's going to wreck his own voter base if they actually believe him and keep buying stocks, and who knows. Anyways, that's just really all I have for now. I'll go more in detail in other videos. I don't want to make a long video. So, other things that are going on. The yield curve, it's steepening. Or no, it's not steepening. It's actually flattening. So the yield curve inversion was a few months ago, right? It was like 4 or 5 months ago. Okay. Well, what happens is it inverts and then it normalizes again, or it becomes more flatlined, and the Fed's trying to manipulate that, right? And you still, it doesn't mean anything because you still have 3 to 6 to 18 months after the yield curve inversion, and I think that's where we are right now. Okay. Currently, this is how it looks right now. It's trying to invert again. So the Fed's freaking out. And right now, the repo market, they just injected 300 billion. 300 billion. That's almost 1/3 of $1 trillion. The entire U.S. economy is around 20 trillion. And the Fed, on a daily basis, is pumping like 300 billion, 1/3 of $1 trillion into the banking system, because the banks are pretty much probably failing, or one of them failed, and now they won't lend to each other. The liquidity, there's a liquidity crunch. All the debt, outstanding debt, is with interest, is sucking up the system, the free liquidity and the cash in the system. So the Fed's doing QE4. That's what's happening. It's that simple. And the market's ignoring it because they're absolutely complacent. They're like, I've never seen such complacency. I mean, this is exactly what you see at Tops, all right? And but the trade deal talk, I don't know how it keeps working. The only thing I can think of is the algos. He tweets something, the algos pick it up, and then they just somehow keep buying. Listen, money is going into the stock market from somewhere, and I wouldn't be surprised if central banks, maybe not the Fed, maybe another one, but they're all in cahoots and they're just printing money in behind the scenes and pushing everything higher. I don't know, guys. It doesn't make sense. It's insanity. People are maybe this stupid. I don't know. But listen, everything's rolling over economically, although everyone's ignoring it. We just printed below 2% GDP for the quarter, the last GDP numbers. Some more GDP numbers came out today. Actually, let me take a look at that. Well, anyways, here's another article. I posted this in the newsroom. More institutional money and Hedge funds and central banks, they keep buying more and more precious metals. This is what I wanted to show you guys. So the corporate bonds, the triple B tranches, the rated ones, they're pretty much junk bonds at this point. And it's very, very similar to the mortgage-backed security crisis, except this is even worse. Now it's the corporations. So not only have they reinflated the housing bubble, and that's gonna pop again. It might not be as bad, but the corporate credit, the corporate bonds is way larger and worse than the housing mortgage-backed security crisis. Will be worse than it was back in 2008-9. So, and it's definitely hit at a cycle peak, as you can see here. It's insane. They're issuing corporate debt, taking that, buying their own stock shares through corporate buybacks, or not corporate, through stock share buybacks. It's insane. If the stock market tanks, corporations could go under, like really large ones, especially the ones who have been, and I've talked about this, how the CEOs don't care, they're only there for 4 years. It's insane. So the leverage on the triple B debt for the corporate bonds, it's at the highest it's ever been, and these should all be rated, they should be downgraded. And I don't want to get too into the details. I'll post this in the newsroom, links below this video. So since 2009, the debt is at its highest it's ever been, year over year in billions. And it's definitely peaked out. It's rolling over right now. So ever since the tax reform bill that Trump passed in 2017, corporate debt has exploded. I'll post this in the... So the average net debt for EBITDA ratio 2019 is 0.50 times higher relative to year end in 2017. That is nuts. So if you know what EBITDA is, it's revenues and the growth of the company. If you take together the price to share earnings, a bunch of stuff, look it up on Investopedia. The debt is just enormous compared to a company's growth. So this can't go on much longer. It just can't. It's insane. You know, people go, no, man, it's going to keep going higher. Wrong. You know, people say the same thing. They said the same thing when I told them back in 2017, Bitcoin can't go much higher. People, you know, everyone, I'm a contrarian, so no one likes me. That's why my channel's not huge, and they listen to Moon Boys and everyone else who gives them, you know, stories they want to hear. And I just wanted to tell you guys, I think now's a great time, at least for a swing trade, to get back into for a swing trade to the upside on gold ETFs and some mining shares. All right, so this is where I think we are in gold right now on a timeline in a comparison to the last bull market. So, you know, markets, they don't, you know, repeat, but they rhyme. It's not going to be exactly like this, but they all look the same. It's that bubble chart, that Wall Street cheat sheet, right? It's human psychology. Listen, this is where I think we are right now in gold. It's either that we're here or here or here. We could be right here. Let me zoom in. We could be. I think we are here. This is where I think we are. I could be wrong, and we could actually just be right here. Or we are right here. Okay? When you look at gold. So let me zoom out. And then this was the all-time high. So the next bull market's going to look like this. All right? Now imagine, so if gold right now is at 1400 and we're like right here. At its all-time high, it's going to be like 10 grand or something, or 7 or 5, who knows. And your mining stocks are going to go up like thousands of percent because they have been beaten down. And I'm going to make another video showing you how much they're beaten down compared to the price of gold going up. All right, like they have completely not even come out of their bear market, barely came out. Like a few came out, but you've seen nothing yet. Nothing. It's still early, super early, especially with this recent pullback, right? All right. So to give you guys an example of how this is going to look, it's kind of like what it's going to look like. I know you can't see the top. Relax. There we go. That's what I'm expecting in the next 3 to 5 years. Maybe less. All right. So let me move this over so you guys can visualize this. That looks great. I mean, if you're only holding physical, I mean, you're not going to get super rich, right? You're just going to protect your wealth. Because, you know, if gold, let's say gold goes to 10,000, or like, oh, it's a 10x return. No, you haven't counted the inflation. You just saved your money. You didn't make it. You didn't make a huge gain. Maybe you'll make a 50 or 100% gain on your investment, like purchasing power. But the purchasing power, you're going to have to adjust $10,000 gold for inflation as well. Because $10,000 won't be worth as much 5 years from now, right? So you saved your money. You preserved it. But the mining stocks, those are going to go up. Like, you're going to see 100x moves and 500x. Who knows? Maybe maybe more. All right? So that's what I'm betting and hoping on. I could be completely wrong. All right. So I just want to point that out. And I'm going to make separate videos on these alone. All right? In the near future. Real importantly, though, very important. This is the newsroom. Here we go. Go in the description section. If you want TradingView, the software I'm using right now is TradingView. You can get a 60% off. And this is a one-time in a year thing they do. And instead of, and like I pay $80 a month for my premium, plus I get the S&P 500 and a few of the other futures. You have to pay like an extra $2 for those separate. But if you want the premium package where you could put on as many indicators as the software could handle, like I can, you could buy it now with the 60% off for $287 instead of paying $720 a year. And you get another $30 off if you use my shill link. That will be in the description of this video, my link. So $30 on top of that. And that's very affordable for the TradingView software. That's for premium. You know, most of you would probably be fine with the Pro Plus or the Pro. And it would only come to like, you know, $179 for the entire year. Or if you just want the Pro, then $108. But then subtract another $30 on top of it with my link. So it's super, super cheap. If you're a trader, you're an idiot if you don't take advantage of this. Because it's the difference between paying out $720 a year or more, probably $800. So you would be saving about $500. All right. So use my link. It will be in the description of this video. Also, go to my website. 15% off holiday sale for a limited time. Probably till the end of this year. I'll keep it up till the end of this year. And I understand people have to go, buy presents and gifts. I get it. So I give you guys a decent sized discount on top of the fact that I'm probably the cheapest out there anyways. So there you go. Oh yeah, wait. Monet. I also have another show link. Perfect for gifts. Monet jewelry. Bullion jewelry, 99.9% gold jewelry. So why buy your loved one a necklace or something that will depreciate in value, or maybe it'll appreciate, but it won't appreciate like 99% bullion. So, it could end up becoming like really, really, really valuable in the next few years. So it would be smart, it would behoove you to buy jewelry that would be worth maybe 5, 10 times more than its value today, right? And you could travel with it. All right, guys, it's pretty much it for now. Smash some likes, leave anything in the comment section, share my videos. It's the only way my channel grows, and I'll continue to do this. And I'll see you guys in the free chat groups, links below.